WhiteOak has strongly embraced the AIF structure. Now, what were your key considerations for taking this route?
So I think AIFs, it's a operationally convenient fund structure. Anything which is illiquid has to be in an AIF format. Anything which needs differential commercial understanding needs to be in an AIF format. The best part about AIFs is the ability to give exposure to segments which a mutual fund being a mass retail vehicle just cannot do.
Welcome to Navigate with HSBC, your trusted source for insights into wealth management, investing, and market dynamics. Let us dive deep into the current market environment, the risk management strategies, and the evolving landscape of AIFs, that's alternate investment funds. And joining us today on the show is Aashish Somaiyaa, the Executive Director and CEO, WhiteOak Capital Asset Management. With over 2 decades in asset management industry, Aashish has led prominent firms like Motilal Oswal AMC, ICICI Prudential AMC, bringing a wealth of expertise to this particular discussion. Well, Aashish, thanks a lot for taking time off
Thank
and
you.
coming in on the show.
Thank you. Thanks for having me.
WhiteOak has strongly embraced the AIF structure,
Yeah.
and it's been met with good success. Now, what were your key considerations for taking this route?
So, I can tell you 2 or 3 things, Nigel. One is that, just take an example. In a very normal discussion, if you talk Indian markets, if you talk about active management in general, at the slightest drop of a hat, you will hear that, in the US, there is not much alpha. And in the US, active managers struggle to beat the benchmark.
Mm-hmm.
The long range history of US last 30-35 years actually shows that it's not that there is dearth of alpha in the US markets.
Mm-hmm.
It's basically that alpha has moved from public markets to private markets. There is more alpha in illiquids, microcap, small cap, pre-IPO, private equity. So what is happening is that if you see India in the next 10 to 15 years, you will find that investing in small cap, microcap, investing in illiquids like say pre-IPOs, growth stage. So my sense is that AIF is just a kind of a vehicle or a regulatory license, but it allows you to do what I'm just kind of describing to you. Right. Investing in segments of the market which have long-term potential and they are considered to be risky because of the illiquid kind of nature. Take an example, in last 6 months, there has been a lot of hue and cry about small caps. Now, WhiteOak as a fund house, we don't manage small cap mutual fund in the open-ended format, but we manage our small cap portfolios in AIFs. Because in AIFs, you can have gating. You can plan how much corpus you want to raise. You can plan when you want to service the redemptions, right? It's not daily liquidity. Some of the portfolio can be with pre-IPO. Some of it can be SME, microcap, small cap.
Right.
Plus, of course, AIFs allow you to innovate even with the pricing and the commercial structure. Because with mutual funds, you can only have a flat fee. In AIFs, you can have performance-linked fee. You can have different types of fee depending on size of investment or share class. So I think AIFs lend, it's a operationally convenient fund structure, but in terms of the possibilities, anything which is illiquid has to be in an AIF format. Anything which needs differential commercial understanding needs to be in an AIF format. So I think AIF format is, I think in the last 10, 15 years, it has been one of the most significant, additions to our regulatory landscape.
All right, let's take that point forward now, because from your experience, what unique benefits do AIFs offer to investors, especially those who have traditionally relied just on mutual funds?
If you see, mutual funds is the mainstay of the asset management industry. And mutual funds have been designed in a way that, anybody investing 100 rupees a day or 100 rupees a month, right up to anybody investing few crores, it's for everybody. But because mutual funds have to be able to service the last guy or girl in the chain, they have to be standardized, friendly for retail investors. And to that extent, they have to be straitjacketed. And what risks they can take are definitely controlled. The regulator dictates a lot of things in terms of what a mutual fund can or cannot do. Something as simple that in a mutual fund, small cap means stock number 251 to 500 by rank order of market cap. But when I talk about an alternate investment fund, right, there are none of these investment restrictions. A mutual fund has to perforce be daily liquidity. On any given day, without any load or charges, I have to allow you to exit. It doesn't apply to an AIF. That's why I said that when it is pre-IPO, SME, microcap, small cap, we prefer to do in a AIF.
Right.
So commercial understanding is different. Fee structures are different. And the whole illiquid space like VC, private equity, credit, real estate. All of that has to be AIF.
Mm.
So I feel that when it comes to people who have created wealth, people who have been long-term mutual fund investors, ultimately their preference for risk-return combinations, ultimately their preference for certain type of investment or the risk that they can take,
Yeah.
it's more like a graduation, right? So when people's preferences change, they're looking for different instruments. And AIFs give them an exposure to a wholly different segment, which a mutual fund just can't do. As markets advance, as time passes,
Right.
you will see the private market becoming bigger and bigger. And the private market can be accessed only through AIFs. In the US, already by some measures, the private market is bigger than the public market. And the other important thing is that, AIFs have this, it's like I would put it this way, that it's a sophisticated investors mutual fund. You could even say by some measure a rich man's mutual fund, right? But I think the best part about AIFs is the ability to give exposure to segments which a mutual fund being a mass retail vehicle just cannot do.
Well, Aashish, it's been good to have you on the show. Thanks a lot for joining in, giving us insights on a whole host of issues. Markets have their cycles, but as you said, opportunities keep coming about, and that's something that we need to latch on to. Thanks a lot for joining in on the show.
Thank you.
Well, on that note, though, we'll wrap up on this edition. Thanks a lot for joining in. We hope our listeners gained valuable perspectives on the market as well as on investment opportunities. We'll be back soon with another episode of Navigate with HSBC. Thanks a lot for tuning in.